Let's turn to business news now with Giles Beckford, who was almost certain to get an invitation to the royal wedding. Giles, lots of talk today about removing loan-to-value ratios on home loan borrowers. You can discuss that with Megan and Harry. I'm sure they'll be fascinated. We're expecting to hear something from the Reserve Bank.
We are indeed. I might be playing football that day, you never know. But
like Richie.
we'll wait and see. Or doing my hair, but never mind. Yes, lots of clamour about the loan-to-value ratios is prompted by the fact the Reserve Bank has its 6-monthly financial stability report coming out tomorrow morning. The bank has already said, it said a couple of weeks ago, that it would give some indication there what's to happen to the LVRs. Remembering they were brought in 4 years ago to take the pressure off the banks. Everybody says, oh, they're there to cool the housing market, but the Reserve Bank's always said that they would take the pressure off the banks to stop the banks lending too much money to low deposit lenders.
Yeah.
And it's, in particular, it put quite strict limits on property investors a year or so ago. And that's really had the effect, of course, in helping to cool the demand and the ability of people to buy houses. The bank's made it quite clear that it will not be removing them in one fell swoop. Quite clearly, they're going to publish a timetable tomorrow. They'll probably allow the banks to perhaps lend a little bit more to low deposit borrowers, and they'll perhaps signal that they may start taking the LVR restrictions off perhaps from the middle of next year. What happens with property investors, we'll wait to see. I think the bank will want to be cautious. It might well say we will remove the restrictions on property investors at the same time as the government starts to impose further restrictions in the tax field on property investors or other moves to restrict property investment and the hot housing there. The bank, for the Reserve Bank, the worry has always been about the housing market, about the stability of the financial system, and we can expect to hear that stated again tomorrow.
Right, Giles, we began there by talking about loan-to-value ratios. Can you tell us what happened to debt-to-income ratios? The Reserve Bank was hoping to get permission to have that in its armoury, right? Where is that at?
Indeed. Well, remember, Stephen Joyce was about as enthusiastic about it as a sort of a Scottish forward facing the All Blacks. But frankly, that was always doomed to fail. The Reserve Bank says it would like to have them in its armoury of macro-prudential tools, another weapon to use at times of stress. It got sent away for a study into the cost-benefit analysis and the value of them. I have to say, when I spoke to Grant Robertson shortly after he took office as Minister of Finance, he wasn't that enthusiastic about them as well.
Right.
I would think that we can kiss those ones goodbye, and certainly the Reserve Bank will be whistling a long time before they get debt-to-income ratios and their weapons.
Thanks, Giles. What happened on the markets? I haven't caught up with them.
The share market, which hit a record high yesterday, has given some of it back today, down 35 points, 8,141. That's about a 0.4% drop. For the New Zealand dollar, it is sitting at 69.3 US cents and 91.1 Australian.
Giles Beckford, our excellent business editor, thank you very much indeed.